Hey guys, how are we today? I'm assuming you can answer that question in one word, depending on whether you have gone long or short since my last video. Now, I was anticipating quite a strong bounce off of the 8 bars down rule as we approached the $87,500 50% level. And if you want to know where that 50% level comes from, go and watch Michael's video. I am not going to bore you with the same information multiple times. But as you can see, we have just taken out the bar top from the previous day, which resets the swing count, and we have seen another astronomical flush out. I think this was we got over $1 billion of liquidations in an hour. So that was a $2 billion liquidation day. And obviously the swing direction has changed from then. Now, one interesting thing to note is I don't personally want to count this as a swing direction change. Now, blue on the Gann swing indicator obviously means an outside bar, higher high and a lower low. But in my opinion, that higher high isn't enough to justify it really being a change of swing direction, in my opinion. So I'm actually going to count this as a 10 bar swing, similar to this right over here. Now, as you can see, when you start to see significantly more than 7 bars in one swing direction, like 9 or 10, it often leads to major tops or bottoms. Obviously, sometimes 7 is enough, but when you get 9 or 10, it leads to probably even more extreme moves for the most part. Like, how our 9 bars here wasn't as much, didn't have as strong of a reversal as 10 bars here. Now, I haven't really backtested that far back for reversals to the downside, but you can see usually when we get 7 bars down, we tend to see a pretty strong reversal because we are in a bull market. So when you're seeing 8, 9, 10 bars down, you really, really want to be seeing a very strong reversal out of here if you are to still believe we are in a bull market. Now, the weekly chart actually looks very promising for a bounce. Now, whether this bounces into a lower high or higher high is going to be up for a lot of debate. And I know Michael's made a lot of videos on his channel talking about what he thinks, the if this then that type of theory. But you can see we've turned the weekly market bias red. Now, we can see a red market bias in a bull market, but what you don't really want to be seeing is price continuing down after the market bias turns red. Now, in every previous case, when the market bias turns red, we've consolidated just below it and gotten back into the market bias very quickly, as we can see here, back here, and so on. So if the bull market were to continue, we would want to see price move back above 100K, because that's why I believe the market bias will probably be in the next week or two. Obviously, price has gone down, and every lagging indicator is going to take a few weeks to roll over. So ideally, you want to be seeing price getting back above the top of the market bias within the next, I'd say 3 to 4 weeks. So if by the end of the year we are trading below, I would say market bias is 114 right now, so it would be probably about 112, 110, which are some pretty significant levels if you've watched Jason's videos on YouTube and Michael's videos, because that would be both above all the 108K swing tops and bottoms, as well as a couple of Fibonacci extension targets and so on, and trend lines, which I don't have drawn up on this chart here. So that is it on the weekly chart. On the daily chart, you can see we have turned the swing direction up, and we are looking like we're going to get a higher low close on the daily BX trender. But until we can start seeing some significant moves into the green, rather than just a quick fake out and a continued move down, I am not very convinced. Now, the other thing I would need to be convinced that the low is in is daily closes, ideally 3 or more, and even a higher low above the 50-day TMA, which is over here at 107K. So again, you would pay a very big premium for confirmation that the low is in. It's over $20,000 per Bitcoin right now. Looking over at the 4-hour chart, I was sharing this fourth time breakout opportunity with the TIA Premium Discord, and you can clearly see in this case, a failed move up equals a fast move down. We managed to close a couple of candles above this trend line. It looked like we were going to have a retest, but once we started getting a failed move up and then a bearish engulfing candle to the downside, that was a very good signal that we should have gone short. And the break of 4-hour swing bottoms, again, a very good short signal. Now, if we have a look at what's happening right now, we are looking like we're lining up for a fifth time breakout of this trend line potentially. Now, I haven't copied and pasted an orange circle over, but I hope you guys can see what I'm seeing. And if we extend this shorter time frame, 50% level, you can see it looks like we are potentially doing a retest of the 50% level from the underside, and we might get sort of, compression bullish pennant down on the shorter term time frames in this little region here between the trend line and the 50% level. Now, another thing to note, we are 9 bars up on the 4-hour chart. Now, typically when you start to see 7 or more bars on the 4-hour chart, you'll expect at least a consolidation. I find the 4-hour chart doesn't see as strong reversals on Gann's 7 to 10 bar rule as something like a daily or weekly chart, but it often does lead to at least a pause in the trend, which if we chop sideways for a couple more candles, and then, if the stock market opens well in 8 hours time, 10 hours time. Anyway, ignore my terrible maths. I'm very sleep deprived. But if we get a really good, pre-market open, then a good market open, then a good close on the stock market in the next few candles, we might actually get that 4-hour higher low above this trend line, and we could potentially be retesting the low to mid $90,000 level. And obviously this all-important trend line up here at $97,200 that I banged out on about heaps in my previous video. Now, another thing to note is our daily and weekly trends are down, but the 4-hour trends, with the exception of the 3-bar, are up. Now, over on the 1-bar chart, you can see with this lovely, lovely bearish engulfing candle, we have snapped the 1-bar trend down, but our 2-bar and 3-bar charts are still up. Now, one thing I really like about this recent move over the weekend is we are getting higher lows and heaps of price action above the 1-hour TMA, which we have not actually seen a higher low above the 1-hour TMA since around $105,000, where we saw that breakdown. And ever since then, we weren't able to get a 2-bar higher low above that 1-hour TMA. We get a few closes and we get sold right back down. So in my opinion, this is setting up for a major reversal, or at least a reversal that's bigger than what we've seen so far. So instead of the, $4,000 to $5,000 reversals, we might actually be setting up for potentially $10,000 to $13,000 reversal that I did try to call up here, a bit too early, but now I am much, much more confident, especially since it seems if we jump over to CoinGlass over here, the $2 billion liquidation mark seems to be the new $1 billion. Now, if you're a viewer of Michael's channel, you'll know that he talked a lot about $1 billion being a significant pivot point when coupled with a long-short ratio of 3% or more. The entire run up, pretty much, like almost not this entire bull market, but ever since we got the retail hype since Trump got elected, so pretty much from the end of 2024, this $1 billion liquidation signal has marked significant lows or tops, depending on whether you're liquidating longs or shorts. But it seems recently we've been needing $2 billion or to get some really major reversals. Like, when you're only getting $1 billion, it often just pauses the trend for a day or two. You get like a 1 or 2K reversal and the downtrend continues. But these $2 billion liquidation days have seemed to be able to generate some more significant reversals. Now, I don't have the ETF outflow data handy here, but over in the TIA Discord, we were tracking some of the highest outflows in history back to back over the last 2 weeks. Now, if you remember what Michael was saying through here in March, I think it was around 93K, or was it high 80s, that Michael was saying, if the highest ETF outflows in history means that retail sold right before we had a major, major capitulation, 40, 50, 60% reversal, that would be the first time in history that retail sold near the top. Now, if we're getting huge outflows, mid 80s, low 90s, that somehow makes me think we're going to see a rally into the 100 to at least 110K range, potentially slightly higher, just because retail cannot be right. Like 90% of people lose in the market. You can't have 90% of people selling their ETFs and then the market rolls over. That just doesn't seem logical. Anyways, with that being said, a 15-minute chart isn't really useful for a YouTube video. This is more what I use with the Discord community over in TIA when we're trying to do really short time frame scalps, trades that are open for, just a few hours. Because by the time I get this video posted, any, $800,000 move or so on the 15-minute chart has probably already played out. Now, heading over to the USDT dominance, we hit the 666 level that Jason talked about on his YouTube channel, the devil's number. But I'm still bearish on the USDT dominance, because if we extrapolate this trend line here, you can see we've pretty much rejected right off the underside of that trend line, which is what we saw here as well in November of 2024, when we got the breakdown, the lower high, and then we went into a new channel. So you could potentially argue this was our lower high before we saw, all that July, August, September mania on Bitcoin and cryptos. And you could potentially argue that this top here lines up a bit more with this March, April top here. And in that case, I might potentially need to draw a new channel right here. So I'm not exactly sure where I draw this channel from, but maybe, something that looks a bit like that could be valid, potentially. In which case, if we see a failed move up out of the channel and we get, this weekly close or the next weekly close underneath it, we could potentially see a failed move up equals a fast move down. Now, the other thing that makes me think that is we have seen so much buying pressure on the weekly BX trender, and the stochastic RSI is maxed out. Now, obviously, it's been maxed out for a couple of weeks, and something that Michael always says, markets can be irrational for longer than you can remain solvent, or an overbought market can be overbought for longer than you think, in which case USDT dominance, and an oversold market can be oversold for longer than you think, in case of Bitcoin. The stochastic RSI was saying oversold from, 114K, and it looked even more oversold at 104K, 92K, but here we are in the $80,000 range. Now, I'm not going to talk about any of the altcoins in this video because otherwise we're going to be here for decades. But you can see on the DXY, again, I was saying how overbought we were, rallying into this 50% level, but we got our correction, held the market bias as support, and now it looks like we're trying to close, depending on what happens this week, it is not 10 a.m. yet. So this week does look like it's going to close above the 50-week TMA. And that is typically not a great sign, because once you start getting a weekly close above the 50-week TMA, you typically only see a 1 or 2 week relief to the downside, potentially, if we have not already seen that before the US, was I saying the USDT dominance? I'm meant to be saying the DXY, but the DXY here, you can clearly see, went on a very big rally. Now, if you remember what Bitcoin and stocks were doing this time, they were rallying as well. So that is potentially a positive sign. If we see the DXY go on a big rally, potentially to, retest some of these institutional sell zones here at 102 to 103. I know Michael is tracking the 103 level pretty big on his channel, and I think Jason is as well. But from Traders Helping Traders community, we like to use the 786 to 826 fib, and that is pretty much bang on 103. So if we do see a rally in the DXY, it can put pressure on stocks, cryptos, commodities, but just based on where I think we are right now, I think we could see a final leg up in stocks and cryptos on a DXY that is also bouncing. And another thing that I think supports my analysis is if we have a look here, when the last time we saw liquidations that were significantly higher than everything else beforehand, like that was when we saw, I think, the $3.3 billion liquidation day, when, in the 2021 cycle, we were looking at typically, about 100 million, 200 million, 300 million. And then all of a sudden you get something that's 10 times that, which is sort of similar to what we've been seeing here. In the last year, we've been looking at, $1 billion as marking potential pivot points. And suddenly we get a $10 billion, a $20 billion day. Now, depending on the exact source, some had it just under 20, some had it just over 20. But regardless of the exact number, that was pretty much, if I can just get this spike here, yeah, we did see a $3 billion liquidation day. So we had a couple of, I think, $2 billion liquidation days, yeah. So similar to last cycle, when, 150, 200 million was considered significant, 350, 400 million was considered major. This cycle, we'd have, 500 million to a billion considered major, and 2 billion being really, really major. And all of a sudden we get something 10 times that. Anyways, I got really sidetracked there. But when you see these huge spikes in liquidations, the market obviously grinds lower. And I think Michael was talking about this in his video back then. You can go watch it on his channel. He was saying when you see that sort of liquidations and everyone getting wrecked, it's very unlikely we'll see a straight V-shaped recovery, and price may continue lower for a bit, but not much lower. Now, if we have a look at the weekly chart where we saw that liquidation wick, now obviously price did continue lower, but we didn't see, a 40, 50% crash. Like from the bottom of the wick, we were down, 21%, which is significant, but it's definitely not the life-ending type of crash that people were expecting based on sentiment at the time. Now, my point being, price goes lower, but you'll very, very rarely see that sort of liquidation come at the end of a cycle. Now, we did make another high from there. We went from the low at 40,000, 40-ish thousand. From the liquidation day low was 46,000. So in that case, price came down around, 15 to 20%, because I'm not very exact with my numbers on this chart and I couldn't be bothered to pull it up on TradingView. But we've pretty much seen an exact repeat, a 20% correction versus, I'd say, 15 to 20 there. And in this case, price rallied to a new high. Now, it obviously 69K wasn't that much higher than the previous top last cycle. I think we went from 65K to 69K. And even if we do see a 100% extension for this cycle, a 135K top from a 126K top, in terms of a percentage move, it would be very similar to last cycle. We saw about 5% of 65,000 gets you to around 69,000. And, 5% of 126,000 would take you to around 140,000. Now, obviously, we can bust through 100% extensions. If we get huge buying right at the top, we can see a wick up to the upside. And obviously, I think Jason was targeting 144,000 in on his X post at the start of the year, being a second take profit, with 122,000 being a first take profit, like where he thinks a potential top could come. So a huge rally here is absolutely not out of the question. But if we have a look at what happened in 2021 and how long it took for that rally to happen, if I can find my date range tool, from the low to the top, it was 16 bars, so 112 days. Now, if you've been watching Michael's videos, and where he talks about a potential triple pump theory similar to the 2017 cycle, where we could still get, close to 200 days left in this cycle, which would actually line us up almost exactly to where I think the S&P 500 top will come in around June of 2026. You can go watch that video on my channel. It's a couple videos back, but I was using the BX Trender as my single analysis tool. So it's really nice to see multiple layers of analysis coming together. Now, if we do get, a 135K top in around 16 weeks, so March of 2026, which was, where Jason was predicting based on time analysis in some of his videos, I think back here, through here, we might see a March top or Q1 2026 top. And, if the market tops, corrects, consolidates, and then goes on its final rally into, June of 2026, that would be an absolutely amazing buy the dip scenario here. Now, depending on your risk management, you could potentially set some stop losses for placing them underneath this low here. And if you bought at, 80,000, that's only around a 10% stop. And even from here, it's only around a 20%. So if the cycle is over and we are going to see some crazy, crazy downside, say in 2021, if you bought through here, you got that bounce. So you'd have had a chance to get to, set your stops at a break even or, take partial profits, etc., etc. And you got out on a break of these lows at 28,500. You would have had a chance to buy back in at 17,000, 15,000, and again on your higher low at 19,000. Rather than holding your potential longs and paying funding fees for months and months and months, or having all your cash tied up for months and months and months. Anyways, that's pretty much all I've got in this video. I still believe we're going to see another all-time high because I don't think the cycle is over. But if it is over, I will happily stand corrected. Now, one little thing to note is over on the THT weekly watch list, if I can find Bitcoin, the monthly BX Trender is now red. And in that case, Peter DiCarlo, the guy at Traders Helping Traders, reckons we'll get an 8 to 10%, 8 to 12% rally, and then another leg down. So he potentially thinks we're in March 2025 rather than April 2025, where we saw, a 76K rally to, 89K, which if we see a rally like that, we're up around, when did he do this post? He did this post at 87.4. So if we see an 8 to 12% rally, that could take us into, 100, 104,000, right into the bottom of this weekly market bias, which is kind of what happened here as well. We rallied into the bottom of the weekly market bias and made another leg down. And if you notice, that other leg down didn't actually go that much lower. So if we do see another leg down and it only just takes out the low, we go to 79K or 77K, it would still be a higher low from here. I really don't want to see that 74K low get broken. If we get extreme fear, huge outflows, everyone's selling, funding rates going into the negatives, significant negatives, and then we get a huge reversal out of that, I would be very, very happy. So what am I going to do right now? I am going to enter a long. I'm going to be watching the 4 hour and 1 hour and 15 minute timeframes to try and find a long entry. Looking at the daily max pain levels, it looks like 86,100 looks like a decent magnet, a nice wick underneath the 50% level and a close back above it. But even if we just chop sideways for a few more candles, I will probably just jump in on a long, and I will be putting stop losses underneath this low here, 83.3, and for part of my position, and I'll be manually closing my position from potentially, 86 to 83, depending on how the lower term timeframes are looking, if we are starting to see some very bearish patterns. Anyways, thank you all for watching, and that's all for today. Please like, comment, and subscribe. Goodbye.